Back with the market right here on ET now. Let's just revisit what the market is up to. It's a tempered start, but no complaints. We are holding on to 11,350, a move of about 40-odd points for the Nifty futures. Yet again, for another consecutive day and the running, you've got traction, better traction for the broader markets. You've got a strong market breadth this Friday morning. Escorts holding up 3%. Amara Raja Batteries looking up by 2.6%. You've got a Glenmark Pharma holding up 2.5%. Muthoot Finance has made a dash of about 2.5%, and Ashok Leyland for a third consecutive day now holding up in the green, 2.3% as we speak. On the flip side though, look what's happening with Interglobe Aviation. After the 23% move up until the start of today's trading session and the previous two trading sessions, you're now seeing Interglobe Aviation completely turn tide, and it's down about 2.25% right now. So some serious bout of profit taking, quick in, quick out kind of trader tendency is what one can, foresee on the stock right now. iShares as well is seeing some cool off. Shriram Transport is down. Bosch and Can Bank are some of your other laggards in trade today. But let's switch focus to infrastructure as a sector. New measures for infra clearly are the need of the hour. Steps to boost the infra cycle. What can be done? What is the status in the sector right now? We've got none other than Vinayak Chatterjee from Feedback Infra joining in, and we also have Mr. Murthy from NCC on the show with us. Gentlemen, morning. Good to have you both on the show. Mr. Murthy, if I could, start the discussion with you. Infrastructure clearly has a multiplier effect on the economy, and a lot has been done overall by the government as well. The intent is pretty clear to give the sector a fillip. But do you think more needs to be done? And if so, what kind of reforms or measures are you expecting to hear from the government?
Good morning to all. The infrastructure sector is suffering because of the COVID-19 pandemic, and things are in a great flux. For example, in the month of April, there was no turnover at all. And likewise, in May, some improvement is there. But as you know, we have declared our first quarter results, and the top line was down by about 45%. And now the second quarter, again, rains are there, and so the turnovers are yet to pick up. We are having two difficulties. One is the availability of manpower. Other one is availability of raw materials. In the month of April, the entire highways were closed by the government because of lockdown. So supply of raw materials was also a problem. And because the workers were moving to their native places, they were held up in relief camps. Ultimately, they were allowed to go there. Now they have to come back from the native places back to the project sites. So right now, we are around 60 to 70% of our execution capacities. The capacities must go up to about 90% or so. We are confident in the next 2-3 months things will improve. So as far as FY21 is concerned, the real turnovers will come in the third and fourth quarters of the current year. As far as the government support is concerned, first of all, the award has come down drastically, mainly because of COVID in the first quarter. And going forward also, things are not looking very good for the construction industry. We are going through a cash crunch, and the Reserve Bank has announced the COVID-19 loans. That is about 10% of the working capital limits for eligible borrowers, including construction companies. That is a good measure, and we were able to take advantage of that. And because we have about 2,000 crores of fund-based limits, we were able to draw about 200 crores from the banking system. The same consortium banks, they have given out 10% of their existing fund-based limits as additional loan to the company for a period of 2 years. So that is a good measure, and that helped us. And also the Reserve Bank has come with a moratorium period. Initially, they said about 3 months. Now it has become 6 months. And by the end of August, when the 6 months period is over, the moratorium, the interest amount of 6 months can be converted into FITL. That is funded interest term loan. That also will help us to some extent. And also, Finance Ministry has come out with one circular saying that the government agencies can bring down the value of the performance guarantee in line with the value of the work executed.
Fair point. Let me
For
also
example,
encourage Vinayak Chatterjee to come in and share his thoughts on where the infrastructure sector is headed and what really needs to be done. Vinayak, what is going on in the infrastructure sector? Just when we look at things getting better, something goes wrong. Now it is the pandemic, now it's the state finances, we know the tax collections are low. So are we in for another 2-3 quarters of more prolonged slowdown in the infrastructure sector? Because this is one sector where recovery perhaps could be affected because of a variety of factors.
I think the simple answer to your question is yes. I mean, even to echo what Mr. Murthy has said, here I will use his words. You are going through an acute cash crunch period in a situation where fresh orders have crashed and have slowly started picking up, very slowly started picking up. I think it is NHAI that is still leading the race in terms of issuance of new orders, but from across the board, we can't have a one-horse race with only NHAI kind of pulling out the order book. So the combination of one-page ad of with Mr. Nayak talking about it, and you just see the movement on order book. So fresh books are a serious issue, compounded by the fact that with all the discussions on liquidity, the sector actually has not seen on the ground great easing of liquidity across the board. Mr. Murthy is lucky that he has had 10% of his consortium bankers releasing 200 crores or whatever. So, but not everybody has had such a pleasurable experience. Companies are struggling. Even if you get a new order, companies are struggling with the banks acting shy on new bank guarantees, working capital for earnest money deposits, for site mobilization. Working capital liquidity continues to be a serious problem. And the bigger, shall I say, worry on the horizon is that this, as you rightly mentioned, states are now on the verge of, shall we say, cash bankruptcy, in the sense that the transfers to the center, etc., are not happening, which all of you know. But remember that the states together account for 60% of all government spend. And specifically for infrastructure, the national investment pipeline assumes that between 35 to 40% of infrastructure spend will come from the states. That is a big worry now. Evidence from across a large number of states, both statistical and anecdotal, reveal the fact that states have cut capital expenditure and new capital works and infrastructure spends and are prioritizing it towards the routine expenses of salaries, fighting COVID, rural misery alleviation, etc. So infrastructure sector is, and particularly we are not just talking about construction sector. We are also talking about the capital goods sector that supplies goods to the infrastructure sector, whether in the power sector or in the water sector. The capital goods industry is also very, very stressed. To get out of this, to clamber out of this hole is not going to be easy. So it is a longish, medium to long-term haul. Let me stop here.
The same question then, I'm going to pick it up on the state subject. There is acute cash flow. States do not have the ability to pay up. Some may compromise on the orders, some may delay the cash flow, but that's the way how things stack up right now, and they will not change for a good 6-12 months. So what happens to a strong company like NCC? Will there be a drop in your return ratios? Will there be a significant change in your return on capital, return on equity? Would you be forced to resort to borrow more?
In fact, our main worry is the state governments. In fact, their focus also has shifted to measures to contain the COVID, a lot of healthcare measures, hospitalization and things like that. And so the construction industry and infra industry at the state government level is taking a back seat. So that is could be a big problem, because about 60% of our orders come from the state governments, and unless the clients pay out the bills on time, we will run into problems of liquidity, and also things can get compounded as we go forward. But some of the states which are very proactive and supportive for construction companies, like in Maharashtra, we are doing the Nagpur-Mumbai Expressway. It is a 2,850 crore package that we got. they have formed an SPV and they have declared financial closure. All the payments are coming in time without much difficulty. And as far as the central government agencies are concerned, payments are quite good because they are all AAA rated companies like National Highway Authority, Airport Authority of India, All India Institute of Medical Sciences. So these things are helping us to some extent. But again, the pandemic is actually creating problems for all, including state governments.
Okay. Okay, we've had so many other problems as well, Vinayak, when it comes to land acquisition, loan rates, labor issues, so many things that still need to be addressed, still need to see some progress. So where do we really stand? What else would you like to see in terms of regulations or reforms to really start to push things forward?
Look, this long litany of woes. Let me try and see if there is some rays of sunshine through the clouds. I think one positive note that I'd like to strike is that there is increasing signals from the central government and finance ministry that work is moving at a fast pace for consideration of setting up a developmental financial institution with a very large balance sheet for the infrastructure sector. There is a growing awareness amongst the political bosses as well as the top end of the finance ministry bureaucrats that this sector cannot depend completely on the commercial banking system to pull it out of the woods in terms of the long-term cash flows at concessional rates that are required for an activity which is largely related to nation building and where the economic returns to the nation outweigh the financial returns conventionally calculated by financiers. So a DFI, a developmental financial institution which has been talked about for a long time, looks like it is finally in the works. And if I hear some little birds twittering on the branches in New Delhi, there is a possibility that in the Prime Minister's speech around 15th August, we might actually see a very major breakthrough announcement on the government actually giving the green signal for setting up a DFI, which will come as a significant boost to the sector, not just for concessional, for long-term financing, but it will also carry the heft of public policy changes so that the government will listen to an institution like that before it starts funding a particular sector. So let me stop here because the rest of the stuff is the usual, the usual litany of woes on land and permissions, etc. I don't want to talk about it anymore. But the big positive to look forward to is that potentially immediate announcement on the setting up of a DFI.
Yeah.
For Infra.
Okay. So we're watching out for that. Vinayak, between 2003 to 8, we saw this super cycle. Do you think after a break of, let's say 12, 14 years that we actually could see one again in the coming decade?
You're asking me this question. You should be asking these to crystal ball gazing macroeconomists. I'm not in that class. All I can say is that I'm a businessman and I hope better times come.
Agencies is the key, and also the banks are not in a position to support the construction companies, particularly in terms of various non-fund based limits like bank guarantees, LCs, etc., because they are under stress, and also they are looking at the construction industry as a high risk business. So actually we are struggling to get the required amount of bank guarantees from the banking system. That is a big problem, as Mr. Vinayak has rightly pointed out. Recently, the Finance Ministry has directed IRDA to look at whether insurance companies can provide secured bonds as a measure to support the construction companies in terms of giving it to the clients. A committee is looking into the matter maybe in 3 months' time. That is an international practice, and I think they are planning to bring it to India. That is a good thing. That will help us in many ways in terms of our dependence entirely on the bankers in terms of the non-fund based.
Yeah. May I come in to add a further point to what Mr. Murthy is saying? We are also giving a suggestion to Finance Ministry to introduce the concept of pooled bank guarantees. Now, for every new project, you have to lock in a certain amount of bank guarantees. So if you're doing 10 projects with a central government PSU, let's say you're doing 10 projects of 100 crores each, then you have 1,000 crores worth of work and for each of them, you have to lock up, let's say, 10 crores for every 100 crores of bank guarantee. So that's 100 crores. Now, all projects are not risky. The government is not going to encash bank guarantees left, right, and center. So why don't you have the concept of a pooled guarantee where as the work progresses on a particular project, pro rata, that balance, that BG gets reduced and is allowed to be, that limit is allowed to be transferred to a new project. So this over and above this insurance company, which is a very good idea, we also need to push the idea of a pooled bank guarantee so that the burden on industry and the burden on the commercial banking sector is reduced and there is no great loss of risk to the procuring agency.
Yeah, I fully agree with you, sir. That is a good measure, and I think you should take routes as quickly as possible. And likewise, recently, they have permitted a reduction in the performance guarantee based on the progress of work. That is also helping us to some extent. In fact, we could get back bank guarantees worth about 157 crores during the last 3 months or so. That's a good relief to us. One is we are not paying BG commission on those expired bank guarantee portion, and also the bank guarantee is expired, so the limit is available for new projects. So likewise, some measures from the regulators and the finance ministry and government agencies will take us a long way.
Gentlemen, we'll leave it there. Thanks so much. Always great hearing your passionate thoughts on really how things can improve for the sector. We take a quick break. We'll be back on the other side.